Hello, my name is Charlie Jillick, and I'm just presenting my investment pitch for the Security Analysis course, spring semester 2025. So we'll get started here. The first thing we're going to touch base on is economic outlook. So the couple, we're going to kind of do this from the top down, or yes. So kind of, or yeah, from the top down. So the biggest thing is starting off there is the global economic outlook. So from the sources I've been researching and looking at, looks like the projected GDP for 2025 is going to be at about 3.3%, and really this is going to be impacted or kind of pushing this growth is going to come from India, Indonesia, and China, and those just are showing kind of a higher growth rates around 6 to 7% in India, and kind of dropping a little bit from there in Indonesia and China around that 5 or 6%. They're going to see the most growth, which is going to move the needle a little higher because of that. And what's going to help, thoughts on that, helping its inflation is expected to ease from 5.4% in previous year to a 3.8%. Things to consider about what could affect these indicators are conflicts in the Middle East, still happening with the Gaza Strip and Palestine and Israel and things like that, and other areas like Iran, and just those conflicts could disrupt energy markets mostly, and then obviously the tariffs that we've been hearing about in recent with the current administration. Having impact. It's just becoming a trade war. Seeing how those things impact this growth. Moving on from global to the next step, it would be national in the United States. Again, these things remain uncertain just because of how things are going right now. Growth right now potentially 2.4% in 2025. Then actually slowing. Some of my research has shown some slowing in 2026 just because of the impacts. Actually, when we have policies and changes and things like that, the impact doesn't happen right away. It happens in future years. Things that could impact that obviously are these tariffs, causing some inflation, growth, and uncertainty there, but also deportation and labor markets are going to change, and seeing how those change and affect GDP has some people thinking that there is some slowing there's potential. The other thing with this inflation is like one thing causing another. Inflation will also look at the Federal Reserve waiting a little bit longer with that potential. They're gonna wait before cutting rates, like they have in previous quarters. We've seen some significant drops in, not crazy, but some rates that we haven't seen in a while the last couple quarters. And just going forward, they're going to be more conservative on this to see just what the new administration's policies are going to cause an effect. The unemployment rate has ticked down, is down to 4%. Last month it was forecasted at 4.2, but so it's performing better there and moving on a little bit lower, but it's doing well. So we'll see how that changes as well. So that's the economic outlook at the global national level. The next way from there would be to head towards the industries, and kind of focusing on the industry that I was most interested in. That was the information technology industry. I just think that there's a lot of potential here, and just want to share the reasons why. And I think one of the things I noticed when just kind of learning about the industry was it is almost a third of the market. About 814 companies are represented in this sector, and just right now we're mid decade. One of the things I was able to learn is IT spending is projected to grow 9.3% in 2025, and that just shows that it's moving in a direction of growth, and this is really coming from things like AI and machine learning, and listen, all these things are really rapidly changing the industry. Things like what AI is and how it's being used in the world and in our country is interesting, and it's just how fast will this continue to move in that direction. There is some risks in this industry. Technology, it's definitely it's more volatile in some parts, some not so much, but some yes. And it really depends on, one of the things is competition, and how quickly competition grows, but also supply chain. Supply chains are, some of these companies need certain resources to make their products to be successful, and if those resources are affected in trading issues or just overall just getting the supplies, can have effects, and just knowing how that happens could cause things. Those are kind of some reasons, but also some things to consider as you're thinking about this industry and how those things can affect it as a whole. Moving on then to where I just wanted to kind of my pitch as to where I started and where I'm hopefully have some success in the game that we're playing is NVIDIA. I started one of my initial investments was with them just because they have a strong market share in the market, and they're leading over a lot of the other competitors. Kind of shown here. I just gave one example that's kind of the same market area and what they do. Their performance is just it's shown year over year growth, and just the returns are strong, and just seems like a good place to start. A couple of things to point out is what I have listed, like the beta. I mean, the beta is great in one way, but can be risky in another, because if it's over one, means that it's gonna, as the market grows, it's gonna grow exponentially more because of that. And if it drops, though, it's also going to drop more. So that's where the risk comes in. But it's been potential, showing more growth. So it's something I'm trying out. Other thing is ROA. ROA, it indicates the company's more efficient in generating profits. So just showing that it is definitely very high in that area as well. The ROE is calculated. ROE is next, and that's calculated by the dividing company's net income by its shareholders' equity. Having a higher ROE indicates that it's using its equity capital more efficiently, and businesses with higher ROE attract investment capital. So it's just growth on growth on growth. And then earnings per share, just something I noticed that was presented in other examples. So I put it on here. Just learning about that, and really learning about that one isn't a comparable between companies, but is something kind of like a score against yourself. Seeing how it grows from year over year, quarter over quarter, and NVIDIA is growing. They're 94% up from a year ago, and that just kind of shows that they're definitely in a growth kind of area. Price over book value, that's the P over B. It's anything greater than 1 indicates the stock is overvalued. But it's often seen in fast-growing technology companies, so like NVIDIA. And if investors are willing to pay a premium for those future earnings, and that just kind of shows that it has value or perceived value of future earnings, so it's going to be that high. Next thing is the P over E, and this is just a ratio that a company stock is overvalued, but it also shows there's expected high growth. And this is not ridiculously high. It's higher than what some, but it's healthy-ish. So yeah, this is just to show kind of like where my I see a great place to start. One thing I did do is kind of look at ETFs. I started with one to kind of offset the volatility of the riskiness of NVIDIA, and just to try and hopefully add some diversification. I might look further into that to see how, watching NVIDIA, see how it performs right now. And if I need some more of a diversity to help with that, I might, but right now that's where I'm starting. The last slide here is just the sources I cited from the for the presentation. And yeah, just thank you very much for listening.